So you are staring at a Xero balance sheet report and see this line at the bottom that says retained earnings. And you think, what on earth does it actually mean for my business? What does that figure mean? Well, in this video, I have got you covered. I want to make sure that you can finally understand what retained earnings are. What do they mean without jumping into complex accounting jargon? Also, the idea of this video is to help you to avoid costly mistakes that you might make when you misunderstand or ignore this number completely. So I don't want you to misunderstand it. I don't want you to ignore it. And I want to help you to feel confident when you look at this report and understand what it means so that you can make decisions. Here's where most people go wrong. They treat retained earnings like a mystery line item, something to be ignored until maybe year end when their accountant mentions it to them. But that misunderstanding could be hiding red flags in your business health. So it's definitely not something to be ignored. And I get it. It can be really overwhelming. I work with multiple business owners as I am a chartered accountant myself and I run an accounting practice. And so I know what it's like from having hundreds of conversations over the last sort of 8 to 10 years. And I understand how intimidating it can be when you look at a balance sheet, which of course overall is already overwhelming. And then you see a line item at the bottom saying retained earnings, and you try and understand, what does this actually mean for me, for my business? Even seasoned entrepreneurs have told me, Ray, I use Xero every day, but I still don't feel confident in what these reports are telling me. And so trust me, you are not alone. And I'm hoping that I can demystify one part of Xero being the retained earnings line item in the balance sheet. So next time you look at that report, you can understand exactly what you are looking at. Okay, because maybe you think that retained earnings are just profits buried on your balance sheet, or you've heard that retained earnings are just to do with dividends and what dividends you can take. But the thing is that if you just think of retained earnings as dividends that you can take, you're missing the full picture of how your business is truly performing. When you misunderstand retained earnings, you could be overstating your available cash, you could be under investing in growth, or you could be paying more tax than you should be. So these are all outcomes that I've seen happen when people do not understand their retained earnings. And all of these will cost you money, often thousands of pounds, and we really want to avoid that. So let's flip the script. Today, I want to show you how to read your retained earnings in Xero as a dynamic snapshot of your cumulative profit and losses so that it can become a powerful decision-making tool and not a mystery. Okay? And the way I want you to think about retained earnings is like your own business's piggy bank. Okay. And when you are able to master retained earnings in Xero, you'll be able to track how your profits that your business is generating are being reinvested. You'll be able to plan accurately for dividends or owner drawings if you're a sole trader. And you'll be able to spot trends and identify issues as they arise. And hopefully also you should be able to, with a proper understanding of retained earnings, over time, you'll be able to better optimize your tax bill by making sure that your profits are correctly allocated between you and your business, and so you can be in an optimal position. But it all starts with understanding, what does that retained or earnings item mean? So as mentioned, I want you to think of your retained earnings as your business's piggy bank. It's all profits that you have kept in the business since day one, assuming you've used Xero since day one. If you started using Xero partway through, like after you've been trading for a few years, as long as your opening balances were correctly entered, it should reflect all the profits or losses that your business has kept, i.e. not distributed or given out. So it's profit less any losses, and that is what that retained earning balance represents. It's a piggy bank of money, and you can take money out. And in this unusual scenario, you can have a negative retained earnings balance where you've taken out more money than there actually is, okay? And it lives under equity on your balance sheet, and you'll see a line item called retained earnings. I will jump to Xero shortly and show you where to find it. So, how is it calculated? How does Xero actually calculate retained earnings? It is something that is automatically calculated by Xero. So there's nothing that you need to do. It's automatically done at the end of a period. What Xero will do is it'll take your total of your profit and loss. So if you've either generated a profit in the year, which means your income, you've made more income than expenses you spent, then you'll have a profit. If your income or your revenue is less than your expenses, so you've spent more than you've made in sales, then you'll have a loss. So it takes the total of that profit or loss report and it automatically posts a manual journal to your retained earnings account. And that's how that balance then builds up over time. Okay. Now, what you want to make sure you do is you want to make sure that you never post a journal yourself to retained earnings, because that would be like going to your personal bank and by hand adjusting the bank balance on the screen. And so you would be looking at a completely wrong bank balance, and that wouldn't be a reflection of how much the bank knows you have in the bank account. Okay. So you don't want to be posting manual journals to retained earnings. With one exception, your accountant at year end will take the total of any dividends or drawings that you've extracted and update that figure. Okay. But you yourself it's not saying that you should be posting to regularly. Let Xero do its automatic manual journal posting at the end of the period. And you must just monitor the balance of that retained earnings account to make sure it makes sense to you and to make sure that you can make appropriate decisions on what to do with accumulated profits over time. Okay. So let's jump into Xero now. And I'm going to take you step by step through how you can navigate finding the balance sheet and how you can look at that retained earnings figure. Okay, let's jump into Xero. Here I am in the demo company. And as I always say in my videos, do remember that you can follow along in a demo company yourself. So everyone who has access to Xero has access to their own demo company where you can test and play. It's like your playground to check things out and make sure that you are feeling confident in how to do things in Xero without messing up your active running Xero that you have for your business. Okay. So as soon as you log into Xero, the first screen you land on is your dashboard. You should be familiar with that. And what I want you to do is navigate to the accounting menu and go to reports. On this screen, you should be able to find your balance sheet. You can see mine is starred at the top here, but if you can't see it at the top here, you want to scroll down to the financial statements section, and there you will find the balance sheet report. Now, if you want it to be easily accessible in the future, you just hit that star button. That will ensure that it appears at the top here and that it also appears under the accounting report section here. So next time you can just click this and it will take you straight to the balance sheet. Now, the first thing you should do with any report in Xero is to check these settings across the top, because you do not want to be looking at any report unless you understand the period of time, the filters and the date range that you are looking at. Okay. Now, when it comes to a balance sheet, you are looking at it's an as at date. What I mean is when it comes to like a profit and loss, you're saying, well, what are my profits generated between this date and this date? So between two dates. A balance sheet is different. A balance sheet is like it's a picture. It's a snapshot at a point in time. So you select the date at which you would like to have that snapshot of your business. Now, typically this report will default to the last day of your of the previous financial year. So your balance sheet will default to the last day of your previous financial year. In this example, I'm sitting on the 10th of June. So I might want to update this to say, actually, I want to view it as at the end of May, because that's more up-to-date financial information for me. But just make sure you are happy with the date range that you are looking at. So I'm going to go to end of last financial year and I'm going to compare to 1 year. That can be a good starting point. I do always recommend adding some comparison columns, because that's going to let you identify trends or patterns of things that are happening in the business and see if it makes sense. Now, this is a demo company, so it does have limited information. But let's say, for example, this were a real company and you do this prior year comparison. So it's comparing the as at the 31st of March 25 to as at the 31st of March 24. And you can see in this example that computer equipment appears here, but not here. If you said, hey, I bought that computer equipment in December 23, so it doesn't make sense that it's shown here and not here. That's the sort of stuff you're looking for. You're using your logic of what you know has or hasn't happened in the business. And if you see something that just doesn't look right, that's when you would investigate further. So that's what I'm trying to get you guys to the point of doing with this, okay? But for this video, my focus and attention is around retained earnings, which is, like I said, your piggy bank for your business. And what you can see here in terms of this demo company is that last year they had retained earnings, which is actually an accumulated loss of £19. And this year the loss has built up to £2,500. That means in the year ended 31 March 2025, further losses were made, which made that piggy bank even shrink even further. Okay, it's a negative balance. Now, obviously, that no one wants to really see that, especially if you've been working hard. So you do definitely want to be seeing a positive number, because remember, brackets in accounting mean negative. So we want that to not have brackets, to show that it's actually positive. So that's something that you're aiming for. Now, if the business has been loss-making, you can't change the fact that that loss is there. So I'm not suggesting that you go and falsely report any numbers, but it's something that allows you to strive towards getting your business to a point that it can consistently generate profits. Now, something that you do need to look out for that I recommend looking at is you want to click into this number. Now, remember, any reports in Xero, the numbers can be drilled down into. So you can click into them and it will show you the transactions that make up that amount. So I'm going to right click and I'm going to open that in a new tab. I could equally have left clicked it, but I just wanted to have it in a new tab so I can go back to the balance sheet if I need to. And what you want to do on this, if you want to get a clearer picture, is maybe go back 2 or 3 years. And what we're looking for is we don't want anything posted to this retained earnings account except for the automatic journal that Xero puts through at the end of each financial period. And you can see that there is the end of period journal that Xero has put through. So you can see there is your end of period 31 March 2024, where that loss of $2,500 was made. So that is what you are looking for, these automatic Xero generated journals. If you are seeing other transactions going through here, then it needs further investigation. Okay. The only exception that you should see is if you are a limited company, what your accountant will do at the end of each year, if they are coming into Xero and posting in your Xero, is they will clear out any dividends that have been declared during that year against your retained earnings balance. Because essentially, a dividend is a distribution of profits that the company has made. And one of the reasons why we don't want to see a negative balance of retained earnings is it is technically illegal to take dividends out of a company where the balance, the retained earnings reserves is negative. Your reserves or retained earnings are negative, you're not allowed to declare a dividend. And so, yeah, that's why it's something that you will often hear your accountant talk about. What are your reserves or your retained earnings, in order to make that decision of whether you can pay yourself a dividend. But equally, if you've generated accumulated reserves or retained earnings, that's the same thing, just different terminology. If you've accumulated profits in the business and they're sitting there, those funds, let's say you had £100,000 positive there, that money, you could say, okay, there's £100,000. Cool. Okay. Let's give myself a £20,000 dividend. And then there's about another 30, 40,000. We'll leave some behind us for, as a backup, because you want to accumulate like 3 months of overheads that you sit untouched to make sure your business is robust. That's a big top tip. So you don't want to empty out your reserves. I don't recommend that. But you could take some as dividends for yourself, and you could use 30 to 40,000 of that to be like, okay, let's reinvest in the business. We've accumulated these profits. Let's go buy that massive piece of equipment that's going to allow us to upscale our operations, or whatever it is. It shows you that there are profits that have been generated that can either be distributed to the business owners or can be reinvested in something that is going to help your business grow more. And that's why I talk about that understanding retained earnings is going to help you to grow your business. I also spoke about how understanding retained earnings is going to help you to optimize tax, okay? Because if you can understand that the business has generated profits, you can say, okay, what is the best position? Do I want to bring down my profits that are going to be reported to HMRC and do a big pension contribution? Do I want to distribute it to myself as dividends? Do I want to reinvest so I can, reduce tax that way? It's important to understand your retained earnings so you can make those decisions with informed information at hand. To recap, I want to just confirm and just make sure you understand that retained earnings are your accumulated profits that have been kept in the business, i.e., you have not distributed them to yourself. You have not paid that money out. Xero will update your retained earning balance automatically. And I recommend regular reviews. So whenever you may be sitting down monthly or quarterly and doing what I would say like a mini management account session, run your balance sheet and make sure that the retained earning balance makes sense to you so that you can make appropriate decisions. Okay. So hopefully that helps. If it has helped you, please like or subscribe and comment below with your biggest Xero head scratcher. I'm Ray Arman, and remember, the clearer the numbers are for you, the stronger your business growth can be. See you in the next video.